In this video we are going to be analysing Mullen, ticker MULN. Now, interesting about this, where did we just hit? We hit a 52-week low, and I believe actually an all-time low down at 20 cents. Again, we have done analysis videos on this in the past. We said always be cautious whenever you're touching something like this, because if a stock can fall, from $10 down to 20 cents, it can continue to fall, or 25 cents when we did the video. And that's why we said we're not going to be long biased now. We wait till it gives us confirmation. You're being up around 70 cents before there's any really confirmation to the upside to start trading it. When you're buying at this, you are buying a gamble. So again, not surprising that it has continued to go lower. And if you are bag holding, again, be try and risk managed. Yes, you're at an all-time low, so probably not the best time to sell. But again, when you get these kind of bounces, it's probably a better idea just to get out, around 30 cents. Wait for some confirmation, and then again it may provide some better opportunities. But straight onto the key technical indicator we use, which is going to be standard deviation channels. Again, we use a 6-month and a 1-year chart to do this. What are we paying attention to? So what is interesting is we have no supports. Again, this stock, if we're looking at the 1-year chart, $10 down to 20 cents, we have no support levels to pay attention to on the support side. So what can we do? Really, we just have to cut down to a shorter term time frame, or again, we're probably not even going to get any levels doing that. So it's just really using key psychological levels. From 20 cents, you've got 15 cents, 10 cents, 5 cents. But again, like I said, very much of a gamble. If you're buying anywhere near this level, it's much better to wait to the upside and get some confirmation levels. And where do we start getting these? So in the longer term, again, we will go over the shorter term after, just because it is very far from where we are now, but our closest resistance is at 70 cents. This is our key one. This is our first deviation on the 6-month. If we're able to break this, come back to test it as a support, and that level holds, that is a good indication this level is valid, and we can see a lot more upside. So again, this is when I would be paying attention to Mullen. Anywhere below this, very high probability that you're probably just going to continue to lose money. If it goes any higher though, we do have further resistance at 114 and also 145. And yes, we're calling them resistances because we expect pullbacks the first time we hit this level. But because again, this stock is so kind of battered in the last year, you can also use these as support. So again, you play the pullback, the original hit, wait for that retest, wait for the break over, come back to test it as a support, and if it holds, good indication that you're going to move to that next level. And again, on these kind of ones, because the deviations are so wide, there is a lot of upside opportunity. You can see that from that 70 cents to 114, 63%. Obviously, you're not going to probably catch the bottom to the top. So even cut off 20%, even if you can look at 40% on that kind of move, still really good upside, and just more the moves that I'd be paying attention to, a lot more high probability that they work out. You just have to be patient to wait for them. If we break further, we have further support, so at resistances at 115, $3.05. We also have one at 290 and a final two at 490 and 680. So again, these are all our key resistances on the longer term level. So these are the ones, if you can be more patient, these are going to provide the highest probability setup. Now, I know some people are going to be bag holding, some people are just not going to be patient enough, and if you're really trying to force trades in the shorter term, what can we pay attention to? So what we'll do is cut down to a 30 and 90 day time frame, and then what we'll be paying attention to is where can we go from here, what are support, what are resistances. So from here we have support at 17, 15, 7, and that's it. So these are our supports. If we push lower, we have supports at 1750. So again, you can use this as a zone. If you start to see a bounce off here again, you could be looking for a move and a target of around 28 cents. So decent upside, but again, because it's on the shorter term time frame, always be more hesitant. There is still going to be a lot of risk because, again, let's say you get the confirmation, you've probably waited 5 cents. Then that really limits your upside potential on this. You're probably only going to be getting a 1.5 to 1 risk to reward. So again, is it worth it? I mean, that's always going to be up to you. But again, that's why I said I'm paying more attention to the longer term time frames and the bigger moves. So those are our support. If you're looking to trade those, that's what we're paying attention to. On the other hand, if you're waiting for targets, so again, 28 would be a target, not a level we look to trade off of, but 2, because again, it's statistical mean. Makes sense, we expect price to reverse to this level, but again, not something we look to trade off of, just 2. If we break that though, this is where we start getting tradable levels, so 38 and 40 cents. First deviation on both the 30 and 90 day chart. Again, look for the pullback on the original touch. If we're able to then retest it and break over, look for it as a support, and if it holds, good indication that will continue higher, and then 49, kind of 48 cents will be that target. Going through there would be 59, 65, and our final levels at 70 and 89 cents. As again, targets to the upside. Again, some of them are very far off from where we are now. What would be the key focus? If you're looking to trade off the shorter term time frame, look for the bounce between 17 and 15 cents, and where would your target be if that level can hold? 28 cents. So that is kind of what we'd be looking at if you're trying to force trades. But again, really just be paying attention to the longer term levels, be patient. That's all what trading's about, being patient, waiting for the strong opportunities, and again, they're going to be the stronger ones on the longer term. Anyway, I hope you enjoyed the breakdown on Mullen. If you did, why not drop a like and subscribe and check out one of these 2 analysis videos.